Good morning. This is Larry McMillan with a market update on Martin Luther King Day. It's a stock market holiday today, but I figured we'd do the weekly update anyways. So S&P is still stuck in this trading range. It hasn't been able to make much progress either up or down. The top of the trading range is the old highs at 4,800. The bottom of the trading range is around 4,500, although the two most recent probes to that area have finished a little bit higher than that. So we're waiting for a breakout from that range before we take what we call a core position, but there's still plenty of trading opportunities within the range. The one thing that has changed a little bit is that since we've gone into this range, the realized volatility of the S&P 500 has declined. It's back down to 15% now. It was as high as 22%, I believe, 21, 22. So this decrease in realized volatility is actually positive, and it cancels out the sell signal that had existed from that indicator previously. The equity only put call ratios are in negative status right now. The weighted ratio has been rising pretty steadily in the last 10 days or so. The standard ratio had a little trouble catching up to that, but now it has. And so both of those are rising. Now they are pretty high on their charts, meaning they're on sell signals but in oversold territory. So probably is not going to be too long before they roll back over to buy sales. But right now they're on sell signals. Market breadth continues to be poor, and that's really all you can say about it. Our breadth oscillators are on sell signals. They have not descended into oversold territory, though, so those sell signals are, I guess you could consider them fresh and strong. The new highs versus new lows has also been very badly deteriorating. On Friday, we saw even New York Stock Exchange, which has generally not been as negative as NASDAQ or our option only stocks indicator. But in any case, they're all three showing many new lows. And in fact, in the form of NASDAQ, it's really surprising. It's about 700 new lows in the last several days. So that's negative. If the average stock is making a new low and the S&P is not very far from its high, that's not a good thing for the market in general. We also have some interesting things going on in volatility. We had a VIX spike peak buy signal on January 10th. That's still in effect. And right now, just the end of last week, VIX climbed up a little bit and now slightly above its 200-day moving average. And the 20-day moving average of VIX is also above the 200-day. So those things are slightly negative, but I wouldn't say VIX is really trending right now. But for that to turn bullish, we'd really need to see VIX decline and bring its 20-day moving average down below the 200-day. Now we are coming into some seasonal periods here. SPX is arguably the strongest of all the indices. The Dow is hanging in there pretty well. You're probably reading a lot of articles about growth versus value, blah, blah, blah. To me, that really doesn't mean much of anything. But, the Dow represents value, and value is kind of winning right now. So QQQ and IWM, which is the Russell 2000, are really lagging. The Qs actually made a new low below their December low, and that is really very negative. If S&P does that, I'd say we're actually in a full-fledged bear market. IWM is flirting with its yearly lows, but hasn't fallen as far as the QQQ has. So right now, those indicators or those indices are really not keeping pace. And to perhaps make things a little worse, we're coming into a seasonally negative period for NASDAQ stocks. Typically, they started out the year strong and then run into some trouble in mid-January. So between now and the 18th trading day of January, which is the 27th, I believe it's Thursday, there's a negative seasonal pattern for QQQ in effect. And then after that, we have a positive seasonal pattern at the end of the month, which we generally play. So we actually trade both of those patterns. But overall, we're still in the trading range. So we're not holding a core position, but we are taking these individual indicators and system signals as they occur. So this is a short week, and sometimes after a 3-day weekend, Tuesday can be a little volatile in both directions. But hang in there. Have a great week trading, and we'll talk to you next week.